everyone, all the participants, and I must thank IDFC Securities for holding this conference. And you are aware that the company had declared the third quarter results yesterday after getting clearance from the board, and the results are already available with you, and also the performance highlights, that is the presentation giving the salient features, has already been hosted on our website under Investor Relations. Under Investor Relations. So you can see that, and I will also give you a brief account of our performance in the quarter 3, and also what has happened so far in the month of January. So as far as quarter 3 is concerned, the steel demand has been quite good in the previous quarter, and I have some figures available with me from the website of JPC. You know that the production of finished steel, it went up by around 3.4%, but consumption growth was higher than that. Consumption growth was 5%. But consumption growth was the highest which I have seen in the last few years in the month of December. If we compare it with November, the consumption growth has been 10% higher, and also I find that the exports, they went up sharply and imports came down. The growth in imports was only 11%, whereas growth in export was 53%. And above all, riding on the high coal prices and the high iron ore prices, the international prices of steel, they also went up like anything. If you recall, we saw the lowest prices for HRC-CAs at 481 in the month of May 2017. And in January, the prices have already touched a level of 568. And the HR prices are 435, not 481. CR prices were at 481, and we saw the high price of 612 in the month of January. And following the international prices, the domestic prices have also gone up sharply. If you look at the net sales realization of sale, we had a lowest net sales realization in the month of November 2016. I'm talking of ex-plant realization, which was at 30,784, and we saw an increase of close to 8,600 rupees, and January 16 closed with an NSR of 38,680. There were 2-3 factors responsible for this kind of increase in prices, and the most important was increase in the prices of coal and iron ore. And second was, of course, the increased domestic consumption, and number 3, in anticipation of increase in the demand, many of the traders or many of the end consumers, they decided to procure more material in the month of December. And it actually proved to be correct. In January, the prices further went up, and most of the steel producers, including JSW, Tata Steel, SAIL, and other small producers, they did not have material to sell in the market. And we saw some unprecedented increase in the prices of TMT. The TMT prices simply went up by 6,000 rupees per ton, partially to neutralize the cost, and partially it was driven by the higher demand from the end users and also from the traders. As far as performance of sale is concerned, you are aware that we sold the maximum quantity in the month of December, and we sold close to 1.4 million ton in a single month, which has been the highest in the financial year so far. And the net sales realization also went up by 17%, and cumulative result of growth in sales and also increase in NSR was 18% increase in the turnover of the company. The EBITDA margin per ton, it rose from 581 in the CPLY to 2,475 in 9 months of 2017-18. But we had some setback in the form of additional interest and additional depreciation because we have been borrowing money from the market, and also many of the capital projects which were under capital work in progress, they were capitalized in the last financial year or in the early part of current financial year. In addition to this, we had to take some additional liability also on account of voluntary retirement scheme, number one, and number two, on account of some liability payable to the state government of Jharkhand on account of higher mining in case of limestone. The liability on account of iron ore had already been accounted for in the second quarter of the financial year. I am happy to share with you that in the quarter 3, most of the steel plants under sale, including Bhilai, Durgapur, RSP, Bokaro, they all turned into profit. Now only ISP, it continued to have losses in the quarter. But at the performance stand today, in January 2017, the ISP has also turned into a 2018, the ISP has also turned into a profit-making plant. Standalone quarter 3 performance gives the good confidence to the company that going forward, we are going to deliver much more than what we had in the third quarter of the current financial year. The EBITDA per ton in the third quarter has gone up to 4,162 rupees per ton, which is 107 rupees which we had in the CPLY. The overall performance in the quarter stands at 83 crore profit before tax and 82 crore profit before tax and 43 crore profit after tax. As compared to Q2, the Q3 has been a much better quarter as far as sales are concerned, or as far as this NSR is concerned. We had a 7% increase in the sales volume in quarter 3 as compared to quarter 2. As I said that there has been many factors which have contributed to the performance of the company, and apart from the external factors, which is the market, we improved internally also a lot. We improved our production from the new facilities during the quarter, and also there was tremendous improvement in the techno-economic parameters. If we look at the techno-economic parameters of the company, there was all-round improvement in blast furnace productivity, specific energy consumption, coke rate, and we improved the consumption of CDI by reducing the consumption of coke in our steel plants. Everywhere we had an increase ranging from 2% to 17%. As far as cost of production is concerned, there is hardly any increase in the cost of production in the quarter 3 as compared to CPLY. But of course, in the 9 months period, because of the higher prices of coal, there has been increase of 16% in the cost of production in the first 9 months of the current financial year. As far as quarter 3 versus quarter 2 is concerned, the increase in the cost is only to the extent of 3%, and that too could be contained by, that the coal prices went up in Q3 like anything as compared to Q2, but cost increase could be contained by bringing in efficiency or by bringing in improvement in the techno-economic parameters and also in the consumption of raw materials, including reduction in the coke rate and also reduction in the consumption of other inputs, including iron ore and certain ferroalloys. In terms of inter-firm comparison, more or less the figures for the quarters are comparable. Sales recorded a improvement of 9% in production in the quarter, whereas in case of Tata Steel, because of certain problems, there is a dip in the production to the extent of 1%. JSW, the rise is 6%. And if we see quarter 3 sales vis-a-vis our competitors, again the numbers are quite comparable. Rather, I would say sale did exceedingly well as far as quarter 3 is concerned. There has been rise in sales of sale to the extent of 15% in a single quarter, as against 10% for Tata Steel and 9% for JSW. Even JSPL, we started their Angul unit, there the increase is only 12%. In terms of profitability, as I said that there has been improvement vis-a-vis our competitors. If you recall, last quarter 3, we had a net loss of 795 crore. As against this, in this quarter, we are having a profit of 43 crore. JSW, they improved their profit from 819 to 1126, and JSPL, which is still in loss, but they could bring down their loss from 187 crore to 74 crore. But if we compare with other competitors, there has been tremendous improvement in the performance of the company vis-a-vis our competitors. And one heartening thing is the cost of production in respect of manpower alone, we could bring it down by close to 7% in the quarter, in the 9 months as compared to CPLY. This is one factor which has been affecting us because everywhere it is said, and we also realize that the manpower cost in case of sale is the highest. So this has been one single area of cost reduction, and we have been working very aggressively in achieving the reduction in the cost of production for manpower. Our salary and wages, which has been on the rise in absolute numbers, we have been able to contain that not only in terms of absolute number but also in terms of per ton of saleable steel, either by reducing the cost or by increasing the production. As I said that in the 9 months, one of the most important factors has been the increase in the net sales realization. But I would like to emphasize here that the net sales realization is not only driven by the market. We also worked on improving the quality of the production. We also worked on increasing the production and sales of value-added steel, including rails, which has traditionally been giving a very good margin, and also that is the domain area of sale where no other competitor is available. So in the 9 months, the increase in the net sales realization contributed to the extent of 5,600 rupees, and then we improved the sale of the coal chemicals, which helped us to the extent of 550 crore. And salary and wages, as I said that we have been able to contain in 9 months, we have been able to bring down our salaries and wages by 334 crore. And we also pursued a very aggressive voluntary retirement scheme in the first 9 months of the financial year, and we could give voluntary retirement to close to 1,300 employees in the 9 months. As far as adverse factors are concerned, the single important reason is a reason for not much improvement in the profit is the input cost escalation, particularly the coal. The coal prices, they have been highly volatile. We saw a price of close to 187 rupees, $187 in the month of October. Then November, the price was close to $200 per ton. In December, it went up to $245 per ton. Again, the prices started coming down, but of late I find for the last few days the coal prices are again on the rise. So the volatility in the coal prices has been one single reason which has been affecting the performance of the steel industry. And the other thing which I said, the capital related charges, that is the higher interest and depreciation, they affected us to the extent of 379 crore. The royalty on iron ore also went up. As you are all aware, the royalty is levied on the basis of IBM prices. So royalty went up by 178 crore during the first 9 months. As it happened in the 9 months, the similar factors were also there in the quarter 3 of the current financial year. The increase in net sales realization helped us to the extent of 1,800 crore. And salary and wages in a single quarter vis-a-vis previous quarter CPLY, we could bring it down by 156 crore. And adverse factors, again, the coal prices, they went up as it happened during the full 9 months. The same problem was there in the last quarter also. The royalty on iron ore also went up by 76 crore. So, in nutshell, after accounting for adverse and favorable factors, we had a positive variance of around 1,500 crore. Means as compared to previous period CPLY, we could improve our performance in the 9 months by around 1,500 crore. And in the one quarter alone, we could improve our performance by 1,336 crore. So as far as capital expenditure is concerned, it has been going on as per the schedule. Rather, recently we have improved our capital spending in the financial year. We originally had a target of spending 3,500 crore, which has since been revised to 4,700 crore. And I'm also very happy to share with you that blast furnace number 8, which was an important part of the expansion and modernization of Bhilai Steel Plant, that has already started the production. We lighted the furnace on 2nd February 2018, and the production has already started coming out. And going forward, we intend to start the SMS3 with the commissioning minimum of 1 converter and 2 caster sometime by the mid of January. Along with that, the bar mill, which could not be started for want of material, that also we will start as soon as we are able to start the SMS2. So all our expansion and modernization, they are scheduled for completion or scheduled for commissioning by the end of the March 2018. And with this, we will be completing all our expansion and modernization. Now we are concentrating on the next phase of ramping up the production from all these facilities. And I'm also happy to share that at ISP, the production ramp-up has already gone up to 70% on an average, and on standalone monthly basis, if we look at the January, we have even crossed 85% as far as ISP is concerned. Likewise, at other plants, the facilities are at various stages of ramping up, and we hope that we will be able to have a quantum jump in the production in the coming financial year, that is 2018-19. Of course, the numbers for 2018-19 are still under finalization, and I will be able to share with you soon once we get the clearance from the board for production for sales and turnover numbers. And friends, you are aware of this common cause case on excess mining, and also the compensation which are payable by the various steel companies. In case of sale, we have been able to determine our liability currently somewhere around 337 crore only. Out of which 267 crore we have already paid, and balance, of course, we have told the government, and we have also gone to High Court for staying that demand, because that is not in terms of the Central Empowered Committee calculations. So we will share these things as and when some developments are there. It is correct that we have received the notices of close to 2,000 crore, and we have disclosed it in our accounts also. But on the basis of honest calculation, we are required to pay only 337 crore. As far as coal is concerned, most of the steel companies and coal companies, they have gone to the divisional authorities for taking appropriate decision of stay. And Tata Steel has already got the stay. The coal companies have also got the stay. We have approached the divisional authority in the Ministry of Coal for granting us stay, and our application is under consideration. So I'm quite optimistic about the current quarter also, as we performed exceedingly well in the previous quarter. I feel that this good performance will continue in the current quarter also. And the prices, as I have just given you in January, the net sales realization, that the ex-plant realization on an average basis for sale has already gone up to 38,700 rupees per ton. This is, I feel, is quite remarkable, and this kind of market continues, coupled with internal efforts in the form of increasing the production, reducing the consumption levels, and also substantial improvement in the techno-economic parameters. I expect that sales should be able to close this quarter with handsome profits. Thank you very much. And one more thing, which my colleague pointed out just now, that budget, as far as budget is concerned, you are aware that it is quite neutral for the steel industry. There is not much impact. In fact, we were looking for some reduction in the custom duties on coal, nickel, and other ferroalloys, which and scrap also, which somehow could not come through. We have some negative impact in the form that cess of 3%, now that has been converted into surcharge at the rate of 10%. So that will give us a negative impact of close to 50 crore. Apart from that, the company or the industry does not have any negative issue or any negative feature as far as budget 2018-19 is concerned. So thank you very much. With this, now I dedicate it to you, and you can always come out with your queries, questions, and also the clarifications.
Thank you very much, sir. Ladies and gentlemen, we will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on your touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. We have a first question from the line of Lakshmi Narayan from Catamaran Ventures. Please go ahead.
Thanks for taking my question and congrats on exceptional performance. I had two questions. First is in terms of the capacity expansion. I'm referring to your presentation of 2017, where the crude steel production in the integrated steel plants will be growing from 14.5, approximately 14.3 million tons to almost like 21 million tons, right? Now, if you can just help me understand how much of that has been established in this year across predominantly BSP, RSP, BSL, and ISP, and then what is your guidance on when this particular expansion of approximately 21 million tons would get completed?
In fact, we have been talking of 20 million ton in terms of crude steel. As far as finished steel is concerned, it will be close to 19 million ton only. So I believe you are talking of 21 million ton of crude steel.
Yeah, I'm talking about 21 million of crude steel.
21 million of crude steel. As I said that most of our expansion and modernization, they have already been completed. In fact, in the last financial year from Bhilai, or in the current financial year from Bhilai steel plant, we could hardly get anything because I just now mentioned that our hot metal will start coming from, it has started coming from blast furnace 8, which is the only blast furnace under expansion and modernization just now. We started that on 2nd February 2018, and SMS3 will be ready only in the next month. So we start getting crude steel once the SMS3 is in place. So as far as ramping up the production is concerned, this year we intend to close our saleable steel somewhere around 14.8 to 15 million ton. This is what I expect as of now. The way production has been going on, we should be able to achieve that. And
what is that saleable steel, sir? 14.8
to 15 million ton. This is what I am expecting right now.
Okay, and the post expansion of the
post expansion, now most of these units will start functioning from the next financial year, and we have kept a target of somewhere around say 17.5 million ton for the next financial year. This is what we are expecting, that we should be able to reach that level having completed all the facilities. I'm talking in terms of saleable steel. And as far as crude steel is concerned, maybe next year we are expecting a figure of 18.9 to 19 million ton.
Okay, and saleable steel, you had given a target of around 20.2 after expansion.
17.5 million ton. And saleable steel, including my special plants, that is the ASP, SSP, BISP. And you know, all the units, 3 units have been taken up for disinvestment by the Government of India. So for the time being, I'm not including the production coming from these units for the next financial year. So this 17.5 million ton, I have been talking for the 5 integrated steel plants, which includes Bhilai, Durgapur, Rourkela, Bokaro, and ISCO steel plant, Banpur.
And that you had given last year in terms of...
Last year?
So last year it mentioned in the investor presentation that it will go from 17.5 to almost like 19.6 or something in terms of saleable steel.
No, not 18-19. That was the target for 19-20.
Okay, that's for 19-20.
19-20 because I knew that Bhilai would take some more time to come up. 18-19, as I said right now, the Bhilai will start giving me production in the right way from 1st April 2018 only.
Okay. Thank you so much, sir. I'll come back in.
19-20, I'm quite confident that we should be able to reach a level of somewhere around, say, between 18.8 to 19 million ton. I'm quite confident. Again, I'm excluding production from three three special steel plants because they are already under disinvestment.
So this you are talking about the saleable steel between
steel
FY20. Okay.
FY20. And FY19, as I said, I repeat, we are taking a target of 17.5 million tons.
Okay, 17.5 to 19 later on. Okay.
Yes, later on 19.
Thank you very much, sir. Ladies and gentlemen, kindly restrict your questions to 2 per participant to enable the management to take questions from maximum participants. We have a next question from the line of Ashutosh Somani from JM Financial. Please go ahead.
So, if I look at your segmental reporting, I am looking at it from a sequential point of view, not CPLY. So, particularly wanted to understand what has happened in Rourkela and Bokaro during this quarter, where the EBIT has jumped from 50 odd crores to 300 odd crores in both the plants. And a similar kind of movement has happened in revenue, and I assume that or my guess is that the volume number for both of these plants have not changed much from 2QFY18 to 3QFY18. So will it be fair to say that most of the positive EBIT that has come through because of realization gains in Rourkela and Bokaro for this quarter?
There are 3 reasons. One is, of course, improvement in volume. Second, additional value-added products. Third, the improvement in the NSR, net sales realization. So these are the 3 reasons which have helped us in improving the net sales realization and also the EBIT for these 2 plants. The flat steel prices started going up from November itself. And December, we saw the peak as far as flat steel prices are concerned. And in January, along with flat steel, we have been seeing increase in the prices of the long steel also. So it is not only the NSR which has been helping us, it is also the value-added product. Like if you see at new plate mill of Rourkela, whose products are highly in demand in the country and also in the export market, that has been producing to the capacity. Rather, we have exceeded the capacity. The capacity of this plant is 75,000 tons per month. As against the capacity, we have been producing 78,000 tons per month. And we have touched 80,000 tons per month also. Likewise, for Bokaro steel plant, as far as this HR coil is concerned, we have ramped up our production like anything. And the daily production, which used to be in the range of 10,500 tons per day, now it has gone up to 11,000 to 11,500 tons per day also. And also the CRM production has been increasing. We have improved our cold roll production from CRM 1, 2 and 3 of Bokaro steel plant like anything. So it is not only that the market improvement which has helped us, volume increase. Second, the value-added production. Third, of course, you rightly said that the market has improved, so that has also. So these are the reasons that these 2 flat steel products plants have started giving us the higher rate.
Sir, can you share the volume numbers for Rourkela and Bokaro for 2Q and 3Q so that we understand the NSR gain specifically?
Just a moment. I do not have the plant-wide numbers right now, but we will send you offline.
Okay. And sir, just an extension to this question, what has happened in Bhilai steel plant this quarter? Why has the profit come down from?
Yes, I can explain you. In fact, in Bhilai, there was a problem in the blast furnaces, 2 blast furnaces, blast furnace number 5 and blast furnace number 4. They went into problem. In fact, we had to take shutdown of 1 blast furnace unscheduled. So that was the only reason, since hot metal was not there, so their production also got affected in the quarter. In fact, if we look at numbers for Q1 and Q3, there has been drop in the numbers as far as Bhilai is concerned. There has been a drop in production to the extent of 5%, if I recollect correctly. I do not have the numbers exactly in my hand right now, but if I recollect, particularly for Bhilai, we had certain problems. And that's how we remember this number. The production went down by 5%. So that's why the Bhilai performance has not been up to the mark and as we were expecting.
Perfect. So this is not a question, just making a request in terms of sales volume. I used to previously we used to have those numbers, quite a few quarters back in terms of sales from each of these plants. If you can share that again, since
I will share with you.
Capacity.
I do not have the numbers in my hand, plant-wide production numbers and sales numbers, but I will share with you offline.
Perfect. Thank you so much, sir.
Thank you very much.
Yeah.
Thank you. We have a next question from the line of Sanjay Jain from Motilal Oswal Securities Limited. Please go ahead.
Sir, first of all, congrats for a turnaround.
Thank you.
My question is on what kind of capex we need to do in next financial year 18-19, and how the steel prices have moved. We take the average revenue, which looks quite. Is it largely driven by steel prices, or there is something else? So, if you give some.
Your first question. Answer to the first question first. Next year we are keeping a target of capex at 4,000 crore. This year we had initial target of 3,500 crore, which has been improved to 4,700 crore to take care of the ongoing capital schemes, which include the expansion and modernization at steel plant and also the new hot strip mill, which is coming up at Rourkela steel plant. So the scheduled completion date of hot strip mill has been advanced to February 2019, and the capital expenditure has been stepped up. Most of the equipments have already come and they are in the advanced stage of erection. So we feel that we will be able to get this 3 million ton hot strip mill by November or maybe a month before also. But scheduled completion is February 2019. And as far as the capex is concerned, it is meant mainly for existing schemes only. We don't intend to take up any major capital scheme in even in the next financial year. Of course, some small schemes in the form of oxygen plant or in the form of some additional stove or capital repair of blast furnaces and new coke oven batteries 7 and 8 at Bhilai, that will continue. But no further major capacity addition we intend to undertake in the coming financial year. And this year, as I said, that it is going to be 4,700 crore. Next year, it is 4,000 crore. It is mainly to take care of the ongoing capital schemes.
Great. And on the pricing?
On the pricing, yes. As I said that the international prices are also on the rise. And one thing we must realize and appreciate that steel is a highly cyclical industry. Okay, you cannot continue to have the same prices throughout the year. So the best strategy to survive in the steel industry is you make money when the market is good and keep that money for rainy days. I have been there in the industry for a long time, and for the last 7 years I have been occupying the director position. So this is what I have observed, that when the prices are good, try to get it. And today the prices are good because of the many reasons. One, the international prices are high mainly because of the higher prices of coal and also the higher prices of iron ore. Okay. Number two, the exceptional demand which has arisen in the country on the back of high spending on infrastructure. Number three, there is a frenzy in the market. Traders and consumers, they feel that the prices will further go up. In anticipation of that, they have been trying to store the material with them. And number four, of course, the budget has also given a lot of impetus to the demand growth. And everybody finds that the next year the steel demand should grow at least at the rate of 6 to 7% in the coming year. And then the company has also put a lot of focus on improving the production of value-added steel. Even at the cost of quantity at certain places, we want that we should go in more for the value-added steel. Today, as I was explaining, in Rourkela steel plant, at almost from new plate mill, I am getting 100% value-added production only. No mild steel plate, they are all special quality steels, whether boiler quality or high tensile steel, which gives us more NSR in the market or which gives us more revenue in the market. Right. So I feel this trend will continue. You will find some time when the demand is not good or the prices are not good, and the other times when the prices are exceptionally high or demand is exceptionally high. So steel is a true example of cyclical industry, which we have been seeing not only in the country but the worldwide.
Right, sir. Sir, thanks for such an elaborate reply. But I mean, in the near term, could you give us quantify these benefits in the pricing? Like, for example, as compared to the average in the third quarter, how much prices are up now?
Prices are still on the rise, and as I gave you the figure that as compared to December, the NSR in the month of January on an average has already gone up by close to 3,000 rupees per ton.
Okay, with respect to December
and in
prices?
February again, particularly for flat products, I have been expecting increase of anything between 1,200 to 1,500 rupees per ton. This will be there.
Right.
So prices are on the rise, and along with that, we should also see that the cost of the integrated steel producers has also been rising. Today, if you see the iron ore index is stable at $77 per ton, and coal, after touching a low of 211 very recently, the coal prices have again reached, the index is still at $225 per ton.
Right.
So integrated steel producers, they have also to survive, they have also to get their dues for additional cost which they have been incurring.
Right. Are we going to see additional cost because, or are our costs now?
Yes, definitely. In February, as I said, that cost will go up because of two reasons. One, that whatever high price coal, in December the coal prices were the highest. That coal will be getting consumed in the month of February. There is always a lag of 45 days between procurement or between, receipt of material and consumption of the material. So the high cost coal will be consumed in the current month. So I am expecting there will be increase in the cost because of that reason. And second, when you go in for more value-added production, you have to incur more cost in terms of consumption of ferroalloys. So that is another reason. So cost will definitely go up, but we expect that we will be able to compensate our increase in cost by way of higher realization in the current month. This is what I expect.
Thank you so much, sir.
Okay, thank you.
Thank you. Participants, kindly restrict your questions to 2 per participant. We have a next question from the line of Dhaval Doshi from Phillip Capital. Please go ahead.
Congratulations on the good set of numbers. Sir, just a clarification on the answer that you just gave with regards to the realizations. You mentioned January prices are 3,000 rupees above the December price.
Talking of realization.
Yeah, realization.
Yeah, realization.
So, how would the December realizations be compared to the Q3 average? Would that be higher or more or less similar?
December prices, of course, they are higher than the Q3 average because the prices started rising mainly from December onwards. So naturally, the Q3 average is less than the December average.
So, sir, if I have to look at the January realizations and compare it with...
Realization is higher than Q3 average also and December also.
By how much, sir? If you can just quantify it, please.
I said that if I compare with December prices, January realization, that is higher by close to 3,000 rupees. 3,000 means exactly it is 2,800 rupees per ton higher than the December prices. And as far as Q3 average is concerned, Q3 average is concerned, Q3 average is concerned, that was close to 35,800. I'm talking of long flat combined, and January realization I gave you 38,700. So you can see that there has been increase of close to 2,900 rupees between January prices and Q3 average.
Okay. Sir, second, on the employee cost, sir, you had given a full year guidance of 9,600 crores. That included the gratuity provision of 500. Hello.
That included actuarial variation also.
Yeah, so and there was one change in law which was expected for the gratuity thing which could have resulted into 500 crores of incremental cost. So how do we see the full year employee cost for this year?
You know, gratuity cost is always accounted for on the basis of present value of future liabilities. Like in future we are required to make the gratuity payment, And at the same time, the actuarial valuation is also affected on account of change in the interest rate. Now, interest rates are on the rise. Last year, we did the actuarial valuation at the rate of 7%, taking the interest rate at 6%, discount 7%. And now the 10-year GSEC, that is prevailing somewhere around 765, 770. So there also we will get some benefit out of it. So I believe whatever additional gratuity costs we are going to incur, I know there will be some addition, and particularly this will happen in case of executives. As far as non-executives are concerned, as I mentioned earlier also, we have been paying gratuity without any limitation. Only for executives, 12,500 executives, we need to take additional provision in our books of accounts on account of change in the gratuity rule. And that will be, say, close to 500 crore, which I feel we will be able to get compensated by way of increase in the discount.
Okay. Full year number look like, sir?
Full year number, our total, if you see, my cost is 6,000, 9 months is 6,532.
Yeah.
Okay. I'm expecting another, say, additional liability of 2,200 crore in the last quarter, including this 500 crore on account of. So I'm expecting 2,200 crore, and gratuity, as I said, that it will get compensated by way of reduction in the interest rate, discount rate. So full year number, I expect it should be somewhere around 8,800 crore to 8,900 crore.
So much lower than what we'd anticipated earlier.
Yes. Last time what we talked, I remember, I told you that there will be some impact on account of actuarial valuation also. Now that actuarial valuation impact is coming in favor of the company because interest rates have gone up instead of interest rates coming down. Had the interest rates came down, I would have required to provide more towards retirement benefits. Now since the interest rates have gone up, I may be required to take some write back than what I have already provided. So that benefit will be available to the company. I feel that overall numbers we should be able to contain within 8,800 to 8,900 crore for the financial year as of now.
Okay. And so lastly, what has been the increase in coking coal costs in Q3 and how do we see that in Q4?
Q3, no doubt the coking coal prices have gone up and cost are now talking of cost on consumption basis. Because we have been accounting it on the basis of consumption in our profit and loss account. In Q3 versus Q2, if we look at in Q2, the coking coal cost for imported coal was 13,093 rupees per ton. And in Q3, this coking coal cost is 14,305 rupees, and which is around 9.3%.
And how is it expected in Q4, sir?
Q4, it should be slightly higher. Even in the current month, I'm expecting it will be up by anything between 1,000 to 1,200 rupees per ton on consumption basis. So I find that there will be increase as compared to the previous quarter, at least to the extent of 15%.
15%, you said?
But as I said that we have been working on number of other things to neutralize this impact. One is that we are trying to reduce our coke rate. We are trying to reduce our coal to hot metal ratio, that is the consumption from average of 945, 46 to 900. And to a great extent, some of the plants have already been able to achieve this improvement. We have also been able to reduce our iron ore consumption and also the consumption of some of the ferroalloys. So we are trying to neutralize whatever cost increase is there because of inflation or market forces by way of reduction in consumption in the steel plants.
Okay. Thank you so much, sir, and all the best for the future.
Thank you.
Thank you, sir. We have a next question from the line of Anshuman Atri from Haitong Securities. Please go ahead.
Yeah, thank you for the opportunity and congratulations on strong performance.
Thank you.
Yeah, my question is regarding the synergies and operating benefits which will get after in the next year and say FY19, 20 when the utilization moves up. So how much can we see in terms of improvement in operating margins with all the efficiency plus NSR improvement on value-added products which we have been talking about? $40-50 of improvement in EBITDA, is it possible?
as far as improvement in EBITDA is concerned, I cannot give you any forward-looking direction right now. I can only talk of improvements, and you can estimate on that basis, because it may not be fair on my part to talk about the improvement in the EBITDA. Particularly, we are bound by so many regulations, and I have to honor those regulations. Okay, as far as improvement is concerned, as I said that we are going to improve our production to a level of saleable steel, which we are expecting. It should be 17.5 million ton. We are keeping very aggressive targets as far as coal consumption or iron ore consumption or ferroalloy consumption is concerned. For the next financial year, we intend to bring it down to a level of not more than 900 kg. And also, as far as this coke rate is concerned, we are trying to contain it at somewhere around 460 kg, including for old and new blast furnaces. And also, the proportion of value-added steel is going to go up by somewhere around 20% than the current production. And also, we are going to have substantial improvement in the exports. We are targeting at least 7 to 8% of our total turnover should come by way of exports. So these are some key parameters which the company is going to adopt for the next financial year. I am sure the market continues to help us as it is there in the current circumstances. We have been able to have good profit. We have been able to improve our EBITDA. So if these circumstances continue even in the next financial year, I can assure you from internal side or from within the organization, we have been taking all efforts. And the numbers which you suggested, I am not in a position to comment about those numbers. That you can yourself estimate that we are going to adopt all these good practices in the company, and I can only say that they should help us tremendously in the coming time.
Okay, sir.
Thank you, sir. Participants, kindly restrict your questions to one question per participant. We have a next question from the line of Amit Dixit from Edelweiss Securities Limited. Please go ahead.
Thanks for taking my question, sir, and congratulations for a good set of numbers.
Thank you.
My question is regarding the realization in flats and longs. Can you quantify separately what was the realization in flats and what was there in longs, including and excluding rails?
Okay, as far as this quarter 3 numbers are concerned for flat and long, as far as flat and long numbers are concerned, in quarter 3, average NSR for the flat products was around 36,500, and for long products it was 35,000 rupees per ton. And of course, this was excluding rails. And excluding rails, I do not have the numbers right now that I can share with you offline.
Sure, sir.
As compared to quarter 2, of course, there has been improvement in quarter 2. For flat products, this number was 35,000 rupees, 34,914, and for long products, this was 34,482. So, if you see, the substantial improvement came only in the month of January as far as long products are concerned. But in case of flat products, we continue to get advantage in case of flat products in the second quarter itself. And NSR of long products without rail, we are having for quarter 3, it was somewhere around 31,900 in quarter 3, and in quarter 2, it was 31,000. So the major improvement in NSR in long products, it came only in the month of January. Till December, the long product prices was not that buoyant as the flat steel prices. But from January onwards, we have started seeing a good change in the long product prices. And we hope that at least for next few months, this improvement will sustain and stability will be there as far as long product prices are concerned, because there has been severe shortage of these products in the market.
Sure, sir. Thank you for answering my question. I have some.
Thank you, sir. We have a next question from the line of Kamlesh Jain from Prabhudas Lilladher. Please go ahead.
Yeah, thanks for the opportunity, sir. So just one question on the part of this capex that we have increased our capex guidance from 3,500 to 4,700. But in the presentation, it was mentioned that it also includes the capital repairs and spares. So
That's not very high. In fact, what is there, that the new accounting standards have been there, and as per that, we are required to include expenditure on capital repairs and also on spares having life of more than 1 year as capital expenditure. That amount is not very large. That is in the range of 250 crore only. 250 crore only in current financial year and also in the next.
okay.
So that number is not very large. Mainly it will be for meeting our expenditure on expansion and modernization projects and also on some of the new schemes which have been taken up or which have been taken up either in the current financial year or in the previous financial year.
And sir, how much is the gross block addition and CWIP?
This year I am expecting capitalization of close to 8,000 crore. So this much of amount will move from capital work in progress to gross block.
Okay. Thank you, sir. Thank you.
Thank you, sir. We have next question from the line of Rajesh Lachani from HSBC. Please go ahead.
Okay, thanks for the opportunity, sir. Sir, my question is regarding Billai. So you said there was some production loss in Billai, but if I do this revenue calculation, so year on year the revenues for Billai were up 13%, which is broadly in line with the total revenue growth for sale. So I was just trying to understand, despite having very strong revenue growth in Billai, why is the profitability so low for this plant?
Yes, one is the production could not improve, and when the production does not improve, your techno-economic parameters, they go haywire, and also the consumption level go up. In fact, in Billai, we face this particular problem where the cost went up because of the lower production. Now, revenue is more or less at the same level, or there is an improvement in the revenue, mainly because of increase in the market prices, or mainly in the improvement in the production of bales. We could improve the production of bales in the last 9 months as compared to CPLY. I find at least there is a 20% improvement in the production of bales in the last year and this year. So that helped us in improving the revenue, but at the same time, the shortage of production and also, the breakdown of blast furnaces, particularly number 4 and 5, that added to the cost. It will always happen that when the production is low, your techno-economic parameters will go haywire, and that will affect the production decrease, always affect your EBIT number or your profitability numbers.
Understood, sir. Thanks.
Thank you, sir. Kindly restrict your questions to one per participant. We have a next question from the line of Ritesh Shah from Investec. Please go ahead.
Hi, sir. Congratulations for a very good set of numbers. Sir, my first question is, what is the average iron ore cost per ton? What you had in Q3FY18 and basically last year as well, same quarter?
Iron ore cost, as far as my cost of production is concerned, there has been reduction only, but we go on the basis of delivered price. As far as delivered price is concerned, like we have a delivered price after including this royalty and also DMF close to 1,700 rupees per ton. And there has not been any change because we are not purchasing any iron ore from outside. Our iron ore is 100% captive, and we continue to use the captive iron ore in the financial year. So there has not been any major impact on the company. Rather, I would say no impact on the company on account of rise in the prices of iron ore because we do not purchase iron ore from outside. And my average cost of iron ore on delivered basis at the plant is close to 1,650 rupees to 1,700 rupees. Of course, the royalty increase did affect us because royalty is levied on the basis of IBM prices, and IBM prices are done on the basis of non-captive consumer or non-captive miner which are there in the area. So because of that, the cost went up by close to, I would say, 100 to 125 rupees per ton.
That helps. Sir, just I wanted to check for the Billai steel plant. We get mines. We get ore from what mines?
Billai is getting from Dalli Rajara. Roha Ghat is under development, and maybe we will start getting. We have access to some open ore there at Bhilai, at Rohaghat. So that also it will start from the month of April. But mainly we get from Delhi and Rajara.
Okay, fine. So
Delhi Rajara is close by. It is only 85 kilometers from Bhilai steel plant. So there the transportation cost is very low.
correct, sir. I see in the presentation that there is a depletion of resources and quality constraints over there, and we are planning a new pellet plant.
There, particularly in Delhi Rajara, that's why we are developing Rohaghat, and we are also trying to give some iron ore fines from our raw material mines, that is the RMD mines, raw material department mines to Delhi Rajara, to Bhilai steel plant.
So this pellet plant is expected by when?
Pellet plant, our main pellet plant was expected to come up at Goa, 4 million ton pellet plant, which is held up for environmental clearance. So we are expecting it any day. In fact, that contract has already been delayed by 3 years. We had already allotted the contract to some party, but we are not able to proceed because of the environmental clearance.
Okay. Sir, last question.
Thank you, sir. I'm sorry to interrupt. We have next question from the line of Pinakin Parekh from JP Morgan. Please go ahead.
Yeah, thank you very much, sir. Sir, just a question on the employee cost. If we read the notes to accounts, essentially, we are providing for roughly 100 crores per quarter basis. Now, in terms of a percentage hike, what does it equate to, and what is the latest demand by the labor unions? And given that your statements about very strong profitability expected going forward, shouldn't we expect a higher revision in the wage cost because the environment has fundamentally changed?
Okay. What is there that our wage revision with executive and non-executive employees, it is due from 1/1/2017. Okay. So pending that, we have been taking some provision in our books of accounts, which is equivalent to 7.5% of basic plus DA of the workers and executives taken together. So far, we have not started any discussions or any negotiations either with the workers union or with the executive federation. And as per the guidelines of Department of Public Enterprises, the affordability clause is very important, and we have to give revision to the employees on the basis of affordability. Only if on the basis of financials we are able to afford it, we have to go in for the revision. And I never gave you any indication about the very strong financial performance in the coming year. I never did that. In fact, somebody wanted to know that. I said I can only talk about what improvements we are going to bring in. I cannot translate into financial numbers because I don't want to give any forward-looking statement which is not permitted by the regulatory. So, as far as financial numbers are concerned, yes, definitely there is going to be improvement, but I do not want to talk about any very financially strong performance which we are going to deliver at this stage. So, pending this finalization of accounts even for the current financial year, I cannot give any forward-looking statement. But as far as workers and executives are concerned, they are all very much aware that how the industry has been performing, how the company has been performing. So far, they have not started asking for any particular demand on the basis of which we should need a revision in our provisioning. So provisioning for the time being, it will continue at the same level till we see any very strong revision in our financial numbers, and that will take a call at the appropriate time. Right now,
when do we expect to start negotiations?
Pardon?
When do we expect to start the negotiations with the unions?
Right now we have told them to wait for the opportune time, and they are also very understanding and very cooperative. I must appreciate their cooperation. So maybe when the performance starts looking up, performance starts improving substantially, we will take up the negotiations at that point of time. Currently, we are not talking neither management nor the workers union. They have been talking about the revision.
Understood. Thank you very much, sir.
Yes.
Thank you, sir. We have next question from Nitesh Jain from Axis Capital. Please go ahead.
Sir, I have just one question. When you ramp up this steel production,
yes,
would you have the sufficient iron ore from the captive mines? I mean, the mines will also ramp up. There is no problem on the supply side from the own mines?
Mr. Jain, the only problem is today we are holding so much of stock at the mines, which we are not able to move mainly because of non-availability of wagons and rakes from the Indian Rail.
Oh,
Going forward to two things are going to happen. My requirement is going to go up, but at the same time, I'm also trying to work out how to reduce my iron ore consumption.
Sure.
Whatever existing mines I'm having, they will be sufficient to take care of my requirement for iron ore. That if I want to produce, say, 23 million ton of hot metal say by 2019-20, when my all blast furnaces will be fully ramped up, I will be needing iron ore to the extent of 37-38 million ton.
Correct.
And I will be having capacity of close to 42-43 million ton at that time. And I don't feel that iron ore is going to be a cause of concern. Captive iron ore is going to be a cause of concern for the company. The only problem is that we have not been able to move our iron ore from pit heads to, or from mine heads to our our steel plants today. I think there will be some improvement in the availability of rakes, because coal plants, they have already started getting sufficient stocks with them. And now railway will be in a position to divert those wagons on rakes for movement of coal and iron ore for the other industries.
Okay. As far as the regulatory approvals are concerned, like the environmental clearance and all that, those are already in place for this 40-45 million?
For Goa iron ore mine, we don't face any. Mainly for Goa, we are facing some problem. Otherwise, there are no problems we are having. Goa, in fact, that capacity is to be ramped up to 10 million ton, and we have not been able to do that. But otherwise, we are not facing any major problem anywhere else. Goa is the only problem which we are having today.
Sure. Sir, my second question is, this is only second question, yes.
Sir, we are taking only one question.
No problem, go ahead.
Thank you. Kindly restrict your questions to one per participant. We have a next question from the line of Sumangal Nevatia from Macquarie. Please go ahead.
Yeah, thanks. So just on the capex, when you said 4,000 crore for next year, what is the breakup of maintenance and project in that? And can we assume post FY19 we will only have maintenance capex unless and until we take up a new investment?
No, it is not like this. What is there that in 4,000 crore, approximately 1,900 crore is on account of expansion and modernization. Okay. And close to 1,750 crore or 1,800 crore, that will be for the ongoing capital schemes, and balance will be for repair, for this capital repair and spares having life of more than 1 year. So what is there in steel industry, you have to continue to incur some capital expenditure. Say at the rate of 500 crore rupee per annum per plant, you have to incur to take care of additions, modifications, replacements, or debottlenecking. As I said that we don't intend to take up any new scheme. We will be having only old schemes, and maybe some additions, modifications, replacements will always be there. So, moreover, what happens that there are many milestone linked payments in the project execution. Normally, a project is executed at 4 stages: the preliminary acceptance certificate, then you go in for commissioning, then performance guarantee, and 4th is the final acceptance certificate. Some spillover payments will always remain. Even out of expansion and modernization, even you will find in 2019-20, some payments will be there till the contracts are closed or till we have issued the final acceptance certificate. So, irrespective whether any expansion, modernization, or execution of new schemes has been there, we will continue to spend 2,000 to 2,500 crore of capex per annum. If we decide to take up some new scheme, some more expansion, the cost of that will be over and above this.
Okay, on the volume, sir, when you said...
sorry to interrupt. Please come back in the queue.
Okay, thanks.
Thank you. We have a next question from the line of Bhavin Chheda from Enam Holdings. Please go ahead.
Yes, sir. Regarding the coking coal cost, you had mentioned the numbers. So how much you expect this to go up in the Q4?
Q4, as I said that maybe we are expecting iron ore cost to go, coal cost to go up by around 15% than what we had in Q3.
15% over Q3 average.
Over Q3 average, we expect that it will go up on quarterly basis, because as I said that there has always been a lag between receipt and consumption of that coal. So So whatever coal we received in December at higher prices, that will be getting consumed only in the month of February and March. So that will have its impact on the cost.
In Q3 average, you had mentioned around 11,000, right?
No, not 11,000 for imported coal. The Q3 average I mentioned at 13,100 rupees.
Okay, thank you, sir.
Sorry, not 13,000, 14,300 rupees.
Okay, thank you, sir.
Thank you, sir. We have next question from the line of Abhijit Mitra from ICICI Securities. Please go ahead.
Yes, so I just need to understand the difference between the crude steel production of FY17 for Rourkela and Bokaro and the target that you have given. Because, to my understanding, most of the facilities are completed. So is there still an upstream downstream imbalance for which there is such a big gap between what we are achieving and what we have stated out to achieve for these two particular plants? Some clarity would help.
You want to have it for Q3?
No, I didn't get you, sir. Can you repeat?
You have it for Q3 or 9M?
No, I'm saying in general, the rate of production in these two plants seems to be lower than what we have stated out to achieve.
Right. No, you are right. In fact, in case of Rourkela, it may not be there. In case of, I do not have as I said earlier, plant-wide numbers are not readily available with me that I will be able to share with you offline. But as far as Rourkela is concerned, there may not be any substantial difference in the numbers. But in case of Bokaro, I do agree there has been some difference as far as this crude steel and saleable steel is concerned, because this CRM3 we have not been able to ramp up to the level as it was expected in the beginning of the financial year. That numbers I will share with you offline. Okay?
No worries. Thanks. That's all from
Thank you.
Yeah, thank you, sir. We have a next question from the line of Ayush Sharma from Investec Capital. Please go ahead.
Hi, sir. Thank you for the opportunity. Sir, with no clarity on the pellet plant coming up as in the timelines, what is the differential cost that might come in future for iron ore?
So as far as pellet plant is concerned, let me tell you that pellet plant does not exactly or substantially contribute to the cost reduction. Maybe if you do not have the prepared button, now what is there ideally in a blast furnace, we should go in for 100% prepared button. Like worldwide if you see, and what is the prepared button? Prepared button is in the form of sinter and also in the form of pellet. So instead of pellet, we have been able to use the lump. So today we do not have the pellet plant, and believe me, none of my steel plants have been suffering or none of my blast furnaces have been suffering or giving me lower productivity for want of pellet. Pellet is just a substitute for your lump. Since we are having substantial amount of lump available with us, so my plants are not suffering on account of that, and also they are not suffering higher cost or higher consumption on account of non-availability of pellet.
Sir, the question is, will you be getting iron ore from longer distances going forward? So if Dali Rajhara has a problem...
Only for Bhilai, maybe 1 million tons I have to move from my RMT mine.
Okay, that helps, sir.
Otherwise, Bhilai is currently being fed by Delhi Rajhara. And also we are trying to maximize it from Roha Ghat mines. In case Roha Ghat mines we are not able to get the full production, then we may have to move it from some farther distances, that is from our raw material division mines. And that quantity will be just 1 million tons. Against a consumption of close to say 10 million tons, only 1 million tons will be coming where the cost will be higher by somewhere around 700 rupees per ton. That's all.
Okay, sir. That helps a lot. Thank you.
Thank you, sir. We have a next question from the line of Pallav Agarwal from Antique Stock Broking Limited. Please go ahead.
Yeah, good morning, sir. Just had a question on, what are the quantum of other revenues, which is coal and other sales in 3Q and 2Q, because, from the NSRs that you had mentioned, and the NSRs that we get on a blended basis, there seems to be quite a, some difference. So if you could just help us with the quantum of other, sales in this quarter and 2Q as well.
As far as this coal chemicals and other things is concerned, there has been a substantial improvement in the 9 months as compared to CPLY. There has been improvement of 552 crore in 9 months of the current financial year. 554 crore. That is the sale of coal chemicals in the first 9 months. has been higher by 554 crore as compared to CPLY. Likewise, in the quarter 3, as compared to CPLY, the sale of coal chemicals has been higher by 104 crore. And as compared to quarter 2, it is more or less at the same level as we had in the quarter 2. So in this financial year, as compared to CPLY, there has been substantial improvement in sale of coal chemicals, which has directly contributed to the revenue, and mainly it has happened because of the higher production and also on account of the higher prices which are available on coal chemicals in the market right now.
Okay, sir.
Okay.
Thank you.
Okay, thank you.
Thank you, sir. We have a next question from the line of Sanjay Jain from Motilal Oswal Securities Limited. Please go ahead.
Sir, can you share the crude steel production in the third quarter? I mean, I couldn't find this in the presentation.
Yes, I can share with you. The crude steel production in the third quarter is 3.9 million ton approximately.
3.9 million ton. Sorry?
3.9 million ton. 3.884 million ton.
Okay. And you are guiding for what is the crude steel production you're targeting fourth quarter?
Fourth quarter target is close to, like we are targeting currently, it is around 4.4 million ton.
Okay. So we are running at that rate already in 40
we are running at that. Yes.
Okay, sir. Thank you so much.
Thank you, sir. We have a next question from the line of Dhaval Doshi from Phillip Capital. Please go ahead.
Sir, just wanted to have an idea about the debt. How do you see the borrowings move up? So when can we expect the borrowings to start reducing from FY20?
But I feel that up to FY19, we are at somewhere around 44,000, and our idea is to have the same level of borrowings as on 31st March 2018, and going forward in 2019, we should be able to bring it down. We should be able to bring it down by say around 1,000 crore, and depending upon the performance, it is all performance driven. Depending upon the performance, we are targeting that borrowing should gradually come down as on 31st March 2019 after taking care of repayments and other things. We should be, because we have a capex also. We are having a capex of 4,000 crores. That has also to be met by way of internal resources and borrowing. We intend to bring it down by somewhere around 1,000 to 1,500 crores in the financial year 2018-19. And going forward in 19-20, again depending upon the performance and other factors, as my capex will come down, but my repayment requirement will go up. So overall borrowing should come down by another 2,000 crore rupees in 19-20.
And this does not include any proceeds that we get from the divestment of the 3 small units, right?
No, we are keeping our fingers crossed. Number one, whether they would happen or they won't happen. Number two, we are not very sure whether that money will be retained by the government or that will be given to the company. So I'm not including that.
Why would it not be given to the company? I'm sorry, if you can just clarify on this thing.
Of course, something beyond my hands. So I cannot comment on that. I'm not competent to comment on that. It is all the call of the government. As of now, we are expecting that it would come back to the company only. But whatever decision is taken by the government in due course of time, we have to honor that.
Okay. Thank you so much, sir.
Thank you, sir. We have next question from the line of Ashish Jain from Morgan Stanley. Please go ahead.
Hi, sir. So firstly, on debt, you said 1,500 crores of debt reduction and some repayment as well. So the net debt reduction we should think is 1,500 crores in fiscal 19?
No. But is there that I have to meet my capital expenditure also. So for capital expenditure, depending upon the performance, like today, because the market is buoyant, I cannot work out my entire year projections on that basis. I can only talk of my internal factors which will help us in improving the performance. So if I have to meet the repayment of say 3,500 crore, I have to incur capital expenditure also of 4,000 crore. So that money also would come either from internal resources or it would come from the borrowing. So 1,500 crore reduction which I am expecting, that is after taking care of my repayments and additional borrowings on account of capital expenditure.
Okay, okay, fine. Thank you, sir.
Thank you. We have next question from the line of Amit Dixit from Edelweiss Securities Limited. Please go ahead.
So thanks for taking my question again. Just wanted to know a bit on your coking coal sourcing. I mean, after the quarterly contracts have been dismantled, are you buying totally on the spot, or do you still have some contracts, or I mean, and typically what kind of discounts do you get on the prevailing benchmarks?
Okay. Now, what is there? First of all, let me tell you that we never had the quarterly contracts. So quarterly benchmarks were there. We used to fix the benchmark price. Those benchmarks have been dismantled for the purpose of pricing. But as far as quantity sourcing is concerned, we are having the long-term contracts with the coal suppliers. Those contracts are for a period of 3 years and extendable by another 2 years on mutual consent. So those contracts are still going on. Let me clarify at the first place. As far as pricing is concerned, most of the suppliers in international market today, they have been supplying on the basis of index. So we have the index pricing mechanism in place whereby we decide the premium and discount sitting together before start of the financial year. So we have been following that. All our coal purchases, they have been happening on the basis of index right now, not only for sale, for most of the steel manufacturers, whosoever need met coal, it has to be done on the basis of index pricing only.
Okay, so
and our quantities are secured. We are already having contract for the base quantities. No doubt my requirement is going up. But at the same time, we are increasing our sources also. Earlier, we used to purchase mainly from US and Australia. Now we have many other sources in place. We have been getting from Canada, Mozambique, and Indonesia. We have started getting from these countries also. And our own mining subsidiary JV, that is ICVL, they are also going to start production from the month of March. And we expect that March onward, some production of washed coking coal should also be available from ICVL.
Okay, thanks for the elaborate answer, sir.
Okay, thank you.
Thank you, sir. We have a next question from the line of Falguni Datta from ZS Securities.
So, Mr. Vikram, can this be the last question? Because I have to go for a meeting at 12:30 and it is going to be there.
Hello?
Yes. Mr. Vikram, am I audible?
Yes, sir. Yes, sir. We'll take the last question.
The last question?
Yes, sir. Yes, sir.
Okay, thank you.
Ms. Datta, please go ahead.
Yeah, sir, just one question. So this China rebar prices are down 15% in the last 1 month. So just wanted to corroborate this fact. Is it true? Because, I mean, I have been observing the charts daily and it's very confusing that the Chinese rebar prices keep falling and ours domestic are keeping on rising. So just to confirm on both these.
No, you are right, Ms. Falguni. For certain products, the international prices, no doubt they are down, but they are very, very optimistic within the country. Today, the country is facing a very, I would say, surprising situation that long products, particularly rebars, TMT, etc., they are just not available in the market. Okay. So the domestic prices continue to be strong. Despite international prices for some of the products, particularly long products, coming down, we are not seeing any reduction in the domestic prices of TMT or rebars. And I feel this will continue. The increase will continue. Like after last month, we have not reduced the prices of TMT. Whereas at some of the in some of the countries, the international prices have come down, particularly Chinese. Because long products are something which you cannot import in large quantities.
Sir, even HRC is down.
Only wire rod is one quantity you can import, but TMT, I have not seen TMT getting imported to our countries or rebars getting imported to our country.
And so even HRC is down in China. So is there a divergence between domestic prices and international prices? And
there is. No doubt there is, because domestic today you do not have material. The demand is so robust for flat products, including HRC